we've had virtually nothing but down days in the stock market. And we're talking about all indices right now. So how does that play into the strategy? First thing I want to do is I want to talk about what was the strategy, where did we come from, where are we today? And if you think about Q4 of 2022, in October, we actually hit the market bottom, and the market bottom was down over 26%. Now, we did have a little bounce at the end of the year where we ended up the year at down 19.5%. Now, move on to Q1. This is where we started step one of our strategy, which was basically moving defensive. And you'll find that in January and February, we started adding laddered treasuries to the portfolios. We added value portfolios, moving from growth stocks. We added high yield money market accounts at that point. And then from there, what was the next step? In 2023, as we're going into Q2, it was just a waiting game. And what we were asking our clients to be is patient, be very patient, because we've said it before, the market rewards the patient. It's those that jump without looking are the ones that end up losing in the stock market. So that was the strategy going really up to the end of Q2 of 2023. So what's changed? Well, what's changed is that now, you talk about what Mark or what Rocky had talked about, and that's the August economic indicators. First of all positive moves, no negatives. Second, from the gross domestic product, the GDP, ultimately, we're looking at a potential bottom in Q4. Now, why is that important? Well, keep in mind that the stock market bottoms, generally speaking, about 6 months prior to the economy or the economic cycle bottoming. So that now is a kind of a poignant time when you're looking at where are we in the market and what's moving in the market, which direction are we going? So now let's look at the equal weighted chart here, and we're going to talk a little bit about a dividend trend. If you look at these arrows represent the ex-dividend date for the S&P 500. And as you're probably noticing, every time there's a dividend date, moving back the last 5 quarters, the market was either coming down or we hit the bottom in the market. Now, why is that important? Well, because we got another dividend date coming up, and we've got several indicators that are lining up at the same time. You've got the S&P 500 average moving 50-day moving average, which has been broken. You've got the 100-day moving average, which it sat on as of yesterday. We have the market trending down towards September 20th. And we've got the economic indicators, which appear at this point, we don't know what's going to happen next month, but it appears that we're slowing down a bit and we potentially could be close to the bottom in the economic cycle. So we say all that to say we still got to be patient. We've still got to wait for this to play out. Nobody likes it when the market's going down, but when you're going down in the market in anticipation to be able to pull the trigger to execute the next leg of our strategy, to me, that's exciting. So at this point, we all just need to be patient and let's see how this thing plays out.
Yep, sounds good.